Conventional are higher risk for lenders because they don't have that backing. So therefore, it does make it a little more difficult to obtain those loans because they're higher risk loans for the banks.
Right.
Right.
But it's the
lenders.
It's the highest used one. That is so interesting.
You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association.
All right, guys. Welcome to the YMA Nation podcast. Real Estate Wednesday.
Real Estate Wednesday.
It is your show today. Are you ready?
Yes.
I am Joe Wallace, and this is
Rebecca Wallace.
Guys, if you're on right now, make sure you like, comment, and
subscribe.
That means click that like button right now.
Do it.
Click the subscribe button right now, and down in the comment section, hashtag YMA Nation, so you can go into our cash drawing. Again, congratulations to all our cash winners from last Friday.
Yes,
and if you want to go on our cash drawing, only thing you have to do is hashtag YMA Nation down in the comment section. Make sure you follow us on our Instagram page, YMA Nation, and for additional chances to win free cash on our YMA Nation Facebook page when we post each episode, like, comment, and share the video. Each activity.
Lots of ways.
Each activity puts your name into the drawing more than one time. And you guys seen on last Friday, people win more than once. So today we're talking about home buying. You got a series, right, today?
Yeah.
Yes.
Today's episode is brought to you by the Pyramid Group at Keller Williams.
The Pyramid Group at Keller Williams.
And you can reach us at 864-249-1437. And check out our new webpage. PyramidGroupUS.com.
www.pyramidgroup.us. Look. She messing up, y'all.
PyramidGroupUS.com.
PyramidGroupUS.com.
He messed me up.
If you are in the market for buying a home or selling a home, make sure you reach out to the Pyramid Group. 864-249-1437.
You can do everything from the website. You can send us a contact form if you're interested. You can go to financing. We have a lender link on there. So there's a whole lot of new things with the website.
You got big now. big now, right?
Yes. So we're trying to help people and give you everything in one place. So
good deal.
You will have ample opportunity to take advantage of everything that we have.
On the website. Good job.
Yes. So, what I went back through the episodes and I alluded to this last week, but a lot of people have questions about home loans. What type of loan should they apply for? What will they qualify for? Are they ready to buy a house? How do they know based on where their scores are and things like that? So I said, even though I'm not a lender, everything that I'm telling you, you can Google and find online as well. So all of this information is on the interwebs of places that you can find. I will have a special guest on next week that is a lender that will get a little more into detail.
But we like guests.
Yes.
With good information.
So we're going to start this series, the home loan series, with conventional loans. Yes. So episode 1 is going to be conventional loans. And the reason that I'm starting with conventional loans is because they make up about 70%.
Shock yourself.
They make up about 70% of loans in the U.S.
70%?
Yes.
Wow. I learned something today.
Yes.
70%.
Hey, when I was doing this research, I learned a lot of things because, again, I'm not a lender. I'm an agent. Right. So this was good information for myself, too. Some things I knew and some things I got to learn as well.
Right. I would have thought.
Go ahead.
FHA, I would have thought would have been like the top one, but conventional.
Yes.
Okay.
So what makes conventional different? Do you know what makes a conventional loan different from other loans?
Educate.
Okay. So conventional.
Well, hold on now, because I got a little bit of information going on in this head. I do got some experience, right? So are we comparing it to like what makes it different from the USDA,
FHA, and VA?
Okay, VA. Yeah, we know about VA. Okay, so conventional, the majority of the time is you're gonna need a higher credit score, right? Normally like 680 and above.
Right.
Am I right so far? I'm
well,
close.
Well, what's the major difference?
The major
difference.
The down payment requirement?
No.
It's not backed by any federal or government program.
It does not come with federal government backing.
Y'all better give me a thumbs up down in the comment section.
So what that means is with your FHA, your USDA, and your VA, those are federally backed loans, meaning if the buyer defaults on the loan, that bank is protected because it's it's backed by the federal government.
Right.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Huh? Hold on.
Right. So let's get into some, you touched on some things. The higher down payment is correct. Right? So in most cases, typically you're looking at between 5% to 20% down payment requirement. That means you have to have savings, right? If you want to do a conventional loan, you have to have the assets because they're going to look at your assets, your bank account, your savings account, your IRA, your CDs, things of that nature.
Right.
In most cases, 620 or higher. I can tell you, I don't know a lot of lenders that go down to 620. They may be out there, but they're probably going to charge you a lot in points, meaning you would have to buy your rate down to get to that conventional
threshold.
Yeah, right. To be able to qualify. So that means even more cash out of pocket. So if your credit score is lower, they may say, well, you need to have 20% down. It's going to cost you $5,000 to buy these points down. And, now you're looking at a good bit of cash to go that route. But some lenders, a lot of lenders I know don't even go down that low for conventional loans. Most of them, it has to be, the threshold is like 640, 660 minimum score requirements for that type of loan.
Can I jump in?
Yeah.
Guys, improve your credit, right?
Yes.
Right, it's that simple, right? So if you're trying to purchase a home, there are programs out there where it's like 580 for people with like poor credit, but then it's going to require more cash down. It's probably going to come with a higher rate, right? And it's just that easy to proactively, if you know that, hey, you know what, my lease ends in 10 months. Let me work on my credit right now so I can get prepared.
High as possible. Savings and credit.
And you can always contact Masters Credit Consultants if you want to improve your credit. Masters Credit Consultants, you could go on their website, www.masterscredit.com.
And let me just stop you because the Pyramid Group now has an excellent package under Masters Credit, whether you're in South Carolina, in-state, local, or if you're out of state. So if you contact the Pyramid Group and you need some credit help, we have a specialized team for that now.
Guys, there it is. Don't you guys love partnerships, right? Good partnerships. that helps you.
Right.
Yeah, but try to go into these loans with the best credit.
So there are guidelines for conventional loans, and these are prescribed by Freddie Mac and Fannie Mae.
Okay.
Okay.
I was just talking to Freddie the other day.
I'm sure you were. So they do have max loan limits for home buyers
Okay.
and refinance if you're trying to refinance and go into a conventional loan. So, and this is just based off the research I found for 2021 was $548,250. Now that could have changed since the research I did came out. So talk to your lender about those max requirements and exactly what that threshold is, because you may have to do what's called a non-conforming jumbo loan, and then your lender would be able to tell you more about how those particular loans work.
Right.
Okay. Typically on your jumbo loans, it's going to be higher interest rates, higher down payment requirements, and this is for people with the higher incomes and higher net worth. So your income matters, your net worth matters.
Right.
So that's assets, available cash. All of that is very important when it comes to those type of loans. And then going through the loan process to when you apply for a conventional loan, if you are approved and then you go under contract and you're closing on that, a lot of what they're going to ask you for, it is a lot of the same things that most loans are going to require. So they're going to want to see 2 years of employment history. I think we've talked about that, how important it is to be in a stable job, to keep that job for a long period of time. Or if you're going to leave that job going into the same field, like if you're offered more money, of course, go take more money. But just make sure you talk things over with your lender to make sure that you're making the right move.
And you can watch Monday's episode of Employee versus Entrepreneur.
There you go. And then also we've talked about the assets. They're going to look at your bank statements. They're going to look and see if you've had any overdraft fees, how much money you have in your savings, how much money you have in your checking. If you are a business owner, they're going to look at those statements too. So it's important that, you have cash flow in there as well if you're planning on using those statements.
Right.
And then, of course, with any loan that you get, it's going to have to be a contingent on an appraisal, because no bank or lender is going to give you more money than what the value of the property is that you're trying to buy.
Those days don't exist anymore.
Those days don't exist anymore. So if it doesn't appraise, they're only going to give you that appraisal amount for the property.
Right.
So that's a breakdown of conventional. I hope you got some information about that type of loan, if it's something that would fit your particular situation. It is a little, again, you have to have a little more cash. You have to have more assets to do those types of loans in most cases. But, get yourself with an agent who has great lenders that they can refer you to, that are be willing to answer those more in-depth questions regarding what loan is going to fit your scenario.
That is it. Series 1.
Series 1.
So next week is going to be Series 2.
Series 2 with the guest. With the guest.
With the guest, a surprise guest.
Surprise guest.
Ooh, I hate everything.
And there's 5 episodes in this series total.
5
Yes.
episodes. Can I be a guest?
You want to be a guest?
I'm already a guest.
You're already a guest.
Guys, thank you so much for joining us for Real Estate Wednesday, right?
Thank you, guys.
Series 1 out of 5. Series 1 out of 5,
yeah.
guys. Make sure you like, comment, and subscribe. If you have any questions, do not be afraid to leave your questions down in the comment section.
Yes.
We always have someone that gets back to you.
Yes.
Yes, and make sure you also hashtag YMA Nation down in the comment section so you could go into our free cash drawing. Like, who wouldn't want to win free money?
Yes.
Do it. Guys, we'll see you guys on Friday for Sports Talk Friday.
What the boss is
Millionaires Association. Yeah, see, that's the association.